heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow here in San Francisco. This is Bloomberg Technology.
Coming up, Microsoft, Activision are nearing the finish line on their $69 billion deal. Will it close in time? We'll bring you all the latest.
And chip CEOs meeting with White House officials to push back on new restrictions that threaten sales to China. We'll bring you the details from that meeting and what's at stake for the semiconductor giants.
Plus, we'll talk the state of art, AI and NFTs with digital artist Beeple. Famously sold his NFT for $69 million back in 2021. Our conversation with him later this hour. But first, let's check in on these markets. And some cautious tones, of course, as we get some of that industrial production data coming into the US a little bit lower than anticipated. Some of the retail sales as well, not living up to expectations. So we're still trying to really understand this blurry mixture of really what the US economy is trying to show us at the moment. We are seeing resilience in the NASDAQ, now up 0.3%. Actually, it had been the laggard, had been in the red, and we now turn positive. Two-year yield, we're getting a bid on debt, though, at the moment. Maybe a bit of a haven play amid some of this slower, more cautious economic story coming from the United States, and notably because European yields dropped so hard after we heard a hawkish member of the ECB sort of say, look, maybe we won't be hiking that much further into the future. We're looking at the Chinese market again under pressure after China's GDP growth just showed lackluster earlier in the week. We're off by 2.6% on the Nasdaq Golden Dragon. Moving on and go to the world of crypto. We're going to be digging into it much more later in the show, but we're basically flat. We have gone sub 30,000 though, and I think that's notable, Ed, at the moment. We are still seeing perhaps a little bit of a cautious tone coming into crypto in terms of where we will eventually see perhaps a spot ETF. Are we dialing back that enthusiasm as many had hoped BlackRock would push us over the edge? But look at some of the micro movers for us, Ed.
Yeah, I'm kicking Bloomberg Technology off with an analyst call, actually. Shopify downgraded to inline from outperform. But I think it's a really interesting case study that Evercore ISI is flagging. This is a stock that's up 94% year to date. And they're talking about their concern with its valuation. Justified so far year to date, but Evercore downgrading to inline because they don't see any catalyst to drive the stock that much higher. And you think about all of the gains we've seen in single names this year in that region of 90 to 100 more %. Will we see more of this? I thought that was an interesting case study on Shopify, just based on valuation. The two names that we're watching specifically are Microsoft and Activision. Bloomberg sources telling us that it is unlikely the deal will close today, July 18th, the deadline per the original merger agreement, but they're working on it. There are no signs that they're walking away. We know that Microsoft technically owes Activision $3 billion because it is July 18th, and that was in the merger agreement. But they want to get this done, and the UK is where the focus of that is, Caroline.
Certainly is. The CMA really an about turn. We question why, but we wonder what the next steps are for Microsoft for Activision Blizzard. The deal nearing, 19 months burn that we've had. Can it get over the finish line? Bloomberg's Leah Nyland is here for more. And it is all eyes on the CMA, but it feels unlikely that the deal will go in line with the date. Does that ultimately matter, Leah?
Not actually. It's not a Cinderella clause, meaning it doesn't expire at midnight. They can still move forward with the deal. But there's a possibility that they could either come up with an official extension date for the next couple months, or that they could just keep it as it is, keep moving forward with the CMA to try and close under the original terms.
I guess there are a range of scenarios here, Leah, right? You and I reported along with Dina that the crux of what's happening in the UK is an offer to sell the cloud gaming rights to appease that regulator, which is the final hurdle. What does an extension look like? There's more than one way of doing this.
Yeah, so the minute you open up one of these deals, everything sort of can come up for renegotiation. So they could be looking at changing the top line number, the $69 billion. They could be looking at changing the breakup fee, that $3 billion that Microsoft would have to pay Activision if it walks away. Another option that we've heard is potentially, instead of changing the top line number, they could do some kind of special dividend for Activision shareholders because Activision suspended its dividend in February. So they have a couple different options here for if they decide to extend. The UK CMA has said it will have a decision by the end of August. So we're looking at hopefully closing sometime in the next 6 weeks.
Alia, what's your reporting show as to why the CMA changed its mind? Because it's always been thought of as a regulatory body with teeth. Does it not have that anymore?
I think, this is a really tough one for them. They blocked it. They blocked it pretty early. And then they ended up getting a little bit undermined by the EU accepting a remedy and then the U.S. going to court and not winning. So, there's now 39 other jurisdictions that have approved this deal. They're the outlier. In both the EU case and the U.S. case, there have now been people saying, hey, we think this deal is pro-competitive. We actually disagree with the UK that this deal has a problem. And honestly, the antitrust regulators don't like to be out there on their own. They like it when they all move together sort of in the same way.
Yeah, the UK CMA is out there on its own. This is the last one left in the way of this deal. Bloomberg's Leah Nyland, all things antitrust out of DC, working so closely with our tech team all around the world. Let's keep the conversation going and bring in Brian Lombardy, Managing Director and Head of Event-Driven Strategy at FBN Securities. Brian, you are a merger arbitrage specialist. You've tracked and gamed and played out the scenarios for the outcomes of this deal. What is the probability of a close to your mind right now?
I think the probability of closing here is north of 95%. We're really in the final stages. I heard Leah, give some ideas about why the CMA changed its mind. I think it's an interesting question, but given the significant change in disposition, it's almost a road to Damascus moment for them. I don't think there's any question as to whether or not they're going to change it again. I speculate that they were told by the government to stop making the country look bad. But for whatever reason, they're hand in hand with Microsoft, and I think we're down to days or weeks.
Yes. There are the imponderables, right, Caroline? I mean, the CMA is so interesting in our post-Brexit world, standing out alone as a regulator, right?
Yeah, and there has been reporting done that perhaps the CMA was lent on in some way, that certainly there was a narrative of the UK looking tougher to do business in post-Brexit. And what does such a regulatory move like this mean for doing business going forward from a tech perspective when, of course, Brian, London wants to remain a tech hub? I'm interested in your perspective of what this means for deals going forward more generally. Can vertical M&A get done?
Yeah, I think that there are two, sort of read-throughs. One is in the U.S. So, you've had U.S. enforcers go after vertical deals. You saw AT&T. Now we have this. You have two very strong precedents that, vertical cases are hard to bring. I think if you're a judge and you're looking at a case going forward, judges always try and look smart. They don't want to get overturned. They want to find what's reasonable and stay close to that. What's reasonable now looks like the government bringing vertical deals. Those cases look weak. And then more specifically with the precedent, I think what Corley did on the balance of the equities is going to make it difficult to argue that a PI is ever appropriate in a 13 case like this if the FTC is bringing it. You saw what Nichols did in UNH on remedy. That was cited in Corley's opinion. So now you have two recent remedy opinions that say that the government can't play this burden game. And so it's interesting, the aggressive push to block deals. It looks poorly executed right now because they've taken some things that they've used to threaten merger applicants with, remedy burdens, equity burdens, and they've burned them by losing in court. And so maybe this reckless approach to stop all on M&A works for 5 minutes, but then after the zealots are gone, you have less tools for reasonable people to apply.
Brian, the relationship between Microsoft and Activision is interesting. The deal's not done. And technically, Microsoft owes Activision $3 billion. Do you game out any scenarios where if this drags on, the financial terms between the parties can be revised or changed, the offer price or anything of that nature?
I'm not super focused on the break fee because that would come into play in a situation where regulatory prevented closing. And given the complete capitulation of the CMA, that seems like a very low probability tail event. What I think is interesting here is that, as Leah said, the contract is terminable tonight at midnight. And it would take someone raising their hand and saying, we want out. It's pretty clear to me from what's come up during the pendency of this deal, which is very strong performance at Activision, what's happened in the market since this deal was announced, which is a shift from focusing on corporate culture in sort of like a political stance to focusing on execution. There are significant cash generation at Activision. There are a number of indications that Activision's stock would be up from the levels at which the deal was announced at. Microsoft's internal model, as came out in trial, showed they could pay significantly more. So there's a lot of valuation positives here. And what I thought was interesting in the Reuters reporting on this is that Microsoft appears to be the party that started the conversation on re-upping the agreement. As Leah said, re-upping the agreement is not required. They could just continue to operate under the existing agreement. So if Microsoft is starting this conversation, all Activision needs to do to get a higher consideration is stay silent and let Microsoft do all the talking. As Leah said, there is the possibility that this would take the form of a dividend. I actually think that's the most likely outcome, because any other outcome would require shareholder approval, which would delay things further.
There was reporting that Warren Buffett sold out of this arbitrage move in the last quarter. How much have you stood to gain from betting on this deal, Brian?
Well, so we're brokers, and so we act on behalf of clients. And so clients have done well here. We think there's more upside. The fact that Buffett sold is wonderful. I don't really think of him as an ARB. So from our perspective, it's not super relevant.
Good to know. FBN Securities Managing Director, being kept busy by this current wave of M&A, Brian Lombardi. We thank you very much indeed. Meanwhile, coming up, look, chip CEOs, they're meeting in the White House officials. They're being busy at the moment because they're trying to push back on new restrictions that threaten sales to China. We'll have all the details on that next. Meanwhile, here's an interesting one. Check out Warner Music Group. The company and TikTok have announced an expanded deal that licenses the repertoire of Warner recorded music to TikTok Music, to CapCut. Of course, that's the editing tool they have, and TikTok's commercial music library. Artists, look, they're going to get access to new fan development, to monetization features, merch, ticketing, digital goods, services. Really is the new way that you create sort of #1 singles at the moment. We're up 0.7% for Warner Music Group. This is Bloomberg.
We actually bought NVIDIA for because we knew it was going to be a player in autonomous vehicles, autonomous taxi platforms. We basically reallocated into other AI plays that are not as obvious. NVIDIA is very obvious now. Everybody knows it.
That was Cathie Wood on Bloomberg Television explaining her pullback from NVIDIA. Now let's stick with chips. Executives and CEOs from major semiconductor firms are due at the White House, meeting with officials, expressing their concerns over new restrictions that threaten sales to China. For more, let's bring in Mr. Chip, Bloomberg's Ian King. I think you look at the officials that are taking part in this meeting, that tells you that the level of importance or pressure that's on here.
Yeah, I mean, what's happening is we had all of these regulations announced last October, and they were frankly shocking. The industry was extremely concerned. Now we've got a last-ditch attempt by basically the leaders of the industry, at least the biggest companies in the US, to go there to say, please, look, hey, think again, think about moderating this because of the relationship that, you know, how that's going to affect the relationship with China.
Can you outline? It was yesterday at the White House. We understand that there were some pretty high ups in the administration there, also the CEOs of Qualcomm, for example, NVIDIA, Intel. What are we learning by how high up the food chain this is going?
I mean, it couldn't be higher up the food chain in terms of who's representing the chip industry here. You know, you have three companies with an enormous amount at stake. Qualcomm, 60% of its sales come from China. We've seen NVIDIA already be affected by these regulations. It can't ship some of its best chips, AI-related chips to China, and obviously Intel has a massive stake in what's going on in China and its access to the market there. So that's really what's going on here. The people with the most at stake are going to the administration and saying, look, please think about this, because as we've been reporting and as others have reported, the final versions of these rules are coming up for announcement, and the concern among the industry is that it's even going to be more strict than what was announced last year. That's the push and pull here.
The argument from the White House is that what they're doing is in the interest of national security, and the chip makers are concerned because China accounts for quite a large portion of their sales. But if we use NVIDIA as a case study, they've tried to sort of circumvent existing restrictions by introducing lower performance GPU, basically. Correct. Will that method work going forward?
I mean, it'll work and it won't work, right? I mean, they say, look, we're not circumventing any rules here. We're in the spirit of the rules. You told us not to give them the best stuff, so we're not going to give them the best stuff. What happens, though, is if these things are frozen at a particular point, is the industry moves on, so China gets further and further behind. So in terms of how those regulations are set and whether they are forward-looking and whether they sort of become incrementally more stiff, that really determines their efficacy going forward.
I mean, great story, really outlining how much revenue all these companies have on the line to do with this. Bloomberg's Ian King, as always, we thank you, Mr. Chip, as I call him. Meanwhile, let's talk Chinese chips. A startup there, Byron, is considering an initial public offering in Hong Kong as soon as this year, aiming to capitalize on a wave of local clients turning to its AI chips as an alternative to, of course, the likes of NVIDIA. The company is planning to file for a first-time share sale as soon as the coming weeks, we understand. Meanwhile, coming up, let's talk more on AI. Meta's plan to launch a new artificial intelligence technology with Microsoft. This is Bloomberg.
Okay, so this is the story of how a 27-year-old analyst, Uraraka Coney, managed to convince his Wall Street colleagues to invest in Tesla, a company that he'd spotted 2 years earlier before it had even gone public. A dozen years and some 14,800% gain later, he and his associates at Jennison built a Tesla position which, Caroline, is now worth $5.9 billion. Uraraka Coney, it's a name you may not know, but this profile is just an amazing insight to the kind of behind-the-scenes work that all those analysts are doing behind the big names of Wall Street.
Yeah, and he says he's not a fanboy, right? Yes, he's supported this stock for a long time, but when, for example, they were looking to buy Solar City, he didn't like that deal. He's been, taking calls at home while trying to juggle caring for his young baby daughter at the time. I think it was his own mum who picked up the phone and said, there's someone called Elon on the phone for you. But it is an amazing story, and really someone who has had the courage of convictions, not just about Tesla, but actually Netflix as well.
So what's so fascinating about this Dana Hole profile of him is how he sees Tesla going forward as well. He basically says Tesla's a car company, and going forward, it will still be valued and treated like a car company. But he still sees potential upside. And we've really learned a lot about this individual analyst who has followed the company since, well, before everyone else, basically.
And now, of course, we've heard from Cathy Wood just a moment ago talking about how it's still the robo-taxi idea that she's betting on. But many are now looking at Tesla as an AI bet, too. Even though Elon Musk goes off to start off a new XAI, he's also really installed artificial intelligence within the entire, business model of Tesla. And we can now pivot to more AI, right, in the business model of one Meta, too. It's making its artificial intelligence model, in fact, Llama 2, available for commercial use through cloud providers like frenemy Microsoft. Now, the company isn't actually going to charge for the access for the use of the large language model, but instead, it's opening up the technology to development by outsiders. Bloomberg's Alex Barinka joins us now. Interesting news, of course, big tech having to come together to have this offering. And actually, the open source model is one they've sort of dabbled with Llama from the beginning.
Absolutely. And that open source point is where you actually saw CEO Mark Zuckerberg tune in a blog post this morning saying, we've done this, we can't see what you make with this large language model. Now, this large language model, they call it Llama. Sometimes you hear the term LLM. It's basically the technology, the generative AI technology that underpins chatbots. And Meta is basically coming out and saying, hey, look, we spent all these time and resources investing in this thing. Yes, we'll use it internally, but we want to kind of unleash this on the world with the help of partners like Microsoft, Amazon's AWS, and Hugging Face, and see what you guys come up with. We're not going to charge you for it, but we are going to take away the learnings because we think that will make us also be able to develop it faster in-house.
You know, I talked to a lot of people in the field of AI about Meta, and many people pay them respect. They talk about the people working there. They're highly competent. They've done a lot of work. But the generative AI group within the company was only set up in February. What do we know about what they've been working on in that time?
Now, Ed, I actually had a chance to chat to the VP of this group. He's a chap called Ahmad Al-Dal. He has been working at Meta for a while, was previously at Apple, and says, yes, we've been working on AI for a while, but since February, I asked him, what is actually different? Okay, you've been working on this stuff. He said it makes Meta have the ability to have an end-to-end product group. They're not just working on research anymore. His team is basically in charge of taking the things that's coming out of their research arm and turning it into stuff that consumers can actually use. So this is the first kind of end-to-end rollout since this group, this generative AI group, was created in February that reports into Chief Product Officer Chris Cox. And they will continue working on this type of stuff going forward without, just for the technologists. Eventually, these kind of things could end up in the hands of consumers. And that's why they've kind of wrangled folks from across the organization to make sure that they can make that happen.
You know, Caroline, think back to earnings. I know Mr. Zuckerberg is very into his MMA and preparing for a fight of his own against Musk. But he came out swinging on that earnings call about the work and potential Meta has in AI.
Yeah, and we heard from CFO Susan Lee as well with analysts, and really proficient in trying to say we're focused on artificial intelligence. But Alex, people worried that was a distraction from the so-called metaverse. Are we still going to hear all things AI in their next earnings?
I asked Ahmad about that too, and he said, look, this kind of development could actually help with some of the development in the virtual reality metaverse. But I'll tell you, I'm remembering back to that too. Mark spent like 6 minutes on AI, like 90 seconds on metaverse. So as we go into the next earnings cycle, I will be watching how much are they actually showing the impact of AI in the business. They've said they're infusing it into every single part of the Meta business, from the social media apps to what they're building behind the scenes for the research community.
Right.
So that will be where my eyes will be as well.
All right, Bloomberg's Alex Barinka out in LA. Thank you. Now, coming up here on Bloomberg Technology, we're going to talk climate tech, lowering enterprise carbon emissions. Silvera's CEO, Alistair Fury, coming up. Plus, a little bit on what Amazon has done to lower its own carbon emissions. This is Bloomberg Technology. Welcome back to Bloomberg Technology. Ed Ludlow here in San Francisco.
I'm Caroline Hyde in New York. Let's get straight to these markets, Ed, because we're halfway through the trading day, and actually we're turning a little bit more buoyant. We had been worried about some of the economic data coming in, industrial production, for example, retail sales a little bit softer, and also those bank numbers not all living up to expectations when it came to the first glimpse of earnings that we're seeing. But actually, banks now sort of helping lead the charge, and actually the Nasdaq turns a corner. We're back in the green, up 0.4%. The two-year yield had been sinking dramatically. We're now only off by less than 1 basis point. After Europe, we saw a big buying of debt over in Europe after the ECB, a key hawk there, sounded a little less hawkish. We're looking at Bitcoin currently treading water. We're at 29,900. So interesting that we're actually just sub that 30,000 level. Let's move it on to some individual movers, because the conversation all for the last week has been, will this deal get done? Microsoft, Activision, Blizzard, we know that the date is July 18th, midnight. They've got to really seal the deal. But actually, we understand that they can continue with this M&A, $69 billion worth of a deal. even perhaps renegotiating some of the terms. Maybe we'll see a little bit of more money going towards Activision Blizzard, but this is for the arbitrage players out there at the moment. All eyes on the UK regulators. Microsoft currently on the higher side, more than 5% higher, as maybe arbitrage just starts to wonder whether or not indeed this deal gets done. But also notable that Microsoft is announcing a deal with telehealth, and we actually see Teladoc Health on the right. It was up more than 9% at one point. We're now up 3.3%, but more AI being really interwoven into Teladoc Health to help with clinicians. Ultimately, we're seeing AI just infused everywhere at the moment, it feels like.
Yeah, another mega cap that we're watching is Amazon. Amazon's carbon emissions ticked lower for the first time since the company began reporting the figure, thanks largely to increased purchase of renewable energy, but also a big slowdown in the retail sales growth. Bloomberg's Matt Day has the story out of Seattle. How do we gauge the progress here, Matt? Is this a big achievement?
Well, I think it's certainly a big achievement from where Amazon started. Like, if you roll back the clock to 2019 when they said they were going to go carbon neutral, they set out that goal. They were really a laggard in this. Amazon barely did any sort of climate reporting, and so the fact that they've, for a year anyway, put a lid on their emissions, that's a pretty significant step, because Amazon, in contrast to a lot of tech companies, they move a lot of stuff around. They've got trucks, planes, ships, a very carbon-intensive business, and they've put a cap on it for now.
Remind us, though, how, what was it, a few months ago, they sort of quietly backed away from a key focus in terms of their climate change pledge. It was an interim goal. Can you just remind us as to why they say they've done that?
That's right. Before Amazon set out their net zero goal, they had something called shipment zero. Now, this was a pledge by 2030 to deliver half of their items without emitting any carbon at all. They quietly took that down, as you'd said. They said, listen, we've got a broader goal than that right now. We don't need to have this interim thing. But I think climate activists definitely saw that as a step backward. Amazon has already heard some of that from their employees who held a rally outside their headquarters here in Seattle back in May.
It's interesting. We continue to debate how they measure it, how they really, perhaps some critics say, undercount the impact overall. But for now, they seem to be in an upbeat mode around it. Matt Day, we thank you. And let's talk about the counting, the impact, the way in which you can basically really be transparent about carbon emissions, because Silvera is a leading carbon data provider. It's just raised $57 million in a Series B funding round to finance its expansion to here in the United States after launching in the United Kingdom back in 2020. Pleased to say that the CEO and co-founder, Alistair Fury, joins us now on the fundraising. And what was it? Easy, a tough sell in this current environment at the moment, Alistair?
The current environment has been tough, definitely a change from our Series A, but the secular trend that is like clearly in favor of action on climate, that's from the private and the policy sector. So it's one of the most resilient parts of the venture space for sure. So we were lucky. We were very happy with the way the round turned out.
Boulderton Capital, some big players in Europe as well backing you. I'm interested as to what the technology that underpins your offering, because it's all about software to be giving us this transparency, right?
Yeah, and the whole point is that this is on the track to manage climate change, and there's only really one plan to do that. So that's net zero. And what that means is that by 2050, we need to have reduced our emissions 80–90%. And any residual emission needs to be balanced by a credit. So we provide the data that tests whether the credit is truly a ton of CO2 out of the atmosphere. You wouldn't want an accounting net zero that didn't align with what the atmosphere truly experienced. So that's where we fit into this space. And yet, to measure those credits adequately, you do have to develop a whole lot of software to handle all the data and all of the disclosures, but also to test some of those disclosures with independent data. So where there's a nature-based component, we use satellite data, we use machine learning to test whether the claims of the vendor of the credit and also the corporate who use those credits are well justified.
Alistair, you heard our reporter talking about Amazon and its own carbon goals and what it hopes to achieve. You want to use these funds to enter the US. What kind of companies do you hope to do business with here?
Well, we already sell data to effectively everyone who has an interest in the accuracy of the information, and that could be tier one banks, commodity traders, asset managers, as well as governments and corporate buyers. We've always done a significant fraction of our business in the US, perhaps up to 40%, without having boots on the ground. And definitely the tide is turning in the US, especially, you know, the IRA, the Inflation Reduction Act is like a key turning point of sentiment in the US market. So it's clearly the time for us to double down in that market. It's going to be very meaningful for us over the next few years.
So you're a founder CEO. Where do you
Indeed.
want to get those boots on the ground? Out here in San Francisco, the East Coast? Where's the talent?
Well, climate is really, it's a technical problem, but it's a financing problem. So just to illustrate the scale, from the first mechanically drilled oil well to a 0.5 gigaton of oil took nearly a century. And the net zero plan that everyone signed up to requires us to remove 10 gigatons of CO2 from the atmosphere in the next 27 years on an annual basis. So that's doing 20 times the volume of the ramp up of the oil sector in a third of the time. So it's the capital deployment problem. So you need to deploy just in carbon removal hundreds of billions of dollars a year. So that's a financial problem. So our home base in the US is going to be New York. We have clients all over North America and actually South America now also. But New York's a natural home for us.
You know, Caroline, it's interesting. Alistair mentioned the IRA. We talk a lot about the momentum that the public sector is giving into investing in this area. But with that comes politics.
Yeah, it does. And there's politicization about even the term ESG anymore. And you've heard people only want to talk about it as sustainability now, Alistair. Has that in any way affected the way in which ultimately you market yourself?
That's a great question. The challenge for climate really is it shouldn't be a political one. It has become politicized, but as I said, the long-term trend is basically forced by the physics, and whatever the politics are on a month-to-month, quarter-to-quarter basis, you only have to look out the window, read the newspaper to see the impacts coming home. So the policy response on a global level is inevitable, and we see, you know, China, Europe plowing ahead. So you may have laggard governments who are a little bit behind temporarily because of the kind of political weather, but the direction of travel is pretty clear, and where the insurers, the money managers have a job to do is in managing risk. So they need to make sure that they're aligned with a net zero world, and then they need the data to do that. So, you know, kind of a picks and shovels for climate and net zero is always going to be called for.
All right, $57 million Series B, Silvera's CEO and co-founder, Alistair Thury, thank you for joining us. So coming up here on Bloomberg Technology, we're going to talk about the state of our AI and NFTs with digital artist Beeple, who famously sold his NFT for $69 million. This is Bloomberg Technology.
VC Spotlight, we're looking at a pretty unique company that's just raised its Series A, Futureverse. It's a company that combines 11 different startups from sectors including blockchain, artificial intelligence, the metaverse, gaming, and it's just raised $54 million in a fresh funding from investors. Futureverse began as a kind of tie-up of 8 companies in late 2022 and is seeming to assimilate to 3 more. Let's bring in Bloomberg's Hannah Miller. And, you know, ultimately, this combination must have been tough. What are they trying to build here?
Yeah, so they're trying to build this massive company that provides technological infrastructure that will underpin the metaverse. So they're going into AI, they're going into blockchain, they're going into gaming. They really picture this virtual world that will, you know, take over the internet.
So there's a bit of energy in this space. Money's starting to come back into crypto startups, for want of a broader expression. Coin Fund, big check. Tell us about them.
Yeah, so CoinFund has been doubled down on crypto from the beginning. They really look at early stage companies. This is its 4th seed fund. And they believe crypto has a future. And they actually aim to raise $125 million and totally surpass that goal. So it's pretty interesting to see. And they're also looking at startups that intersect with other areas like artificial intelligence.
All right, Bloomberg's Hannah Miller with the 2 big VC, but also crypto adjacent stories of the day. Caro.
Let's stick with crypto adjacent. Let's talk about the world of NFTs as well. We have got the perfect guest joining us. Beeple, digital artist who, of course, NFT Everydays sold for $69 million back in 2021 via Christie's. He's back this week to join that auction house for their Art and Tech Summit. And boy, I mean, Beeple, the sale of Everydays, the first 5,000 days. Anyone who'd been hiding under a rock at that point suddenly was confronted with non-fungible tokens, but you've gone on to have other landmark sales. I think of Human One. You've then, of course, just launched the Beeple Studio. Where are we in the life cycle of NFTs and crypto right now, from your perspective?
Sure, I think we're still really early. I think there's a lot of use cases that people are sort of exploring with this technology, but I think we've just barely scratched the surface. And I think in terms of infrastructure, a lot can be done to sort of like build up and make these things easier to use, easier to own, safer to own. And I think there's just a lot of ways that creators can still connect with their audience that we've not sort of figured out. And I really look at this technology as being very much like a web page. What could we use a web page for? And we're still figuring that out now, 20 years into the internet. The idea of just owning a virtual item is something that could be applied to many, many different sort of sectors and sort of like use cases. And I think we really are just very, very early in that still.
What's interesting is you're coming together with Sam Spratt, another NFT artist, also AI artists like Grimes, who's sort of working with that from a voice perspective. But also Christie's has got Gucci there. And I'm interested in brands. You've worked with brands. You've offered your art to them. And we're seeing LVMH really adopt it. Are brands wanting to spend on this at the moment?
I think it's something where brands need to be very careful how they're approaching the space. And I think they need to be very thoughtful that this is a little more permanent in a way that once you release an NFT, it kind of doesn't go away. Versus with a lot of other sort of marketing campaigns, it can be like, well, we tried this and it failed and whatever. People are, sometimes being asked to invest, real money in these things, and there is an expectation that they will sort of hold value or sort of, gain value. And so I think people need to approach it very sort of like thoughtfully. And I think especially now, the more grassroots you can sort of have your campaign and be something where it's just about engaging your audience and having fun and then just seeing where it goes from there, I think those are the type of projects that have a lot better chance of success.
But there are many examples where an NFT does not retain its value. The most high profile this month being Justin Bieber's Bored Ape NFT. Its value's down 95% from when he bought it. Does artificial intelligence change that? If you use AI in the creation of an NFT, does it help to retain its underlying value?
Definitely not. It's something where the way you use AI has to be a thoughtful, new way that people see having sort of like lasting value. And I think that's not necessarily easier to do with AI because this is a tool that everybody now has. And so if it's something that is easy for you to do with AI and make, it probably will not have sort of like lasting value because anybody could do that. So I think you really still need to have something that is a truly new, innovative idea. AI is not some sort of like quick fix to give value to NFTs.
I'm sorry, I have to ask, Mike Winkleman, aka Beeple, what's the story behind Beeple, the name?
So the Beeple it's a toy from the 80s. It's a little sort of like fuzzy thing that kind of like lights up and makes sounds. That was a long time ago. That was 20 plus years ago that we started down that path.
Also, what was a long time ago, Beeple, is kind of your AI doomerism. I'm like thinking of interviews you did back in 2020, some of the art you did of a baby Yoda, which speaks to Ed's loves, but like sort of almost becoming a mad AI robotic baby Yoda. You were doing this dystopian art to make us reflect and question the direction of technology. Are you still as doomer as you were back in 2020 about AI?
I am definitely worried about AI, but I think just technology in general. I think there's a lot of pluses to it, of course. I mean, sort of picture of that, but I think there are also a lot of negatives to this stuff that I think are worth exploring in sort of like art. And I think things are moving very fast, especially with AI, and seeing how fast just in the last year these things have progressed and sort of every week new technologies are coming out with new sort of like capabilities. I think it is something where as much as possible, we need to stop and reflect on the effects of these technologies on a more broadly sort of like global scale.
Many trying to answer how to do that, regulators trying to as well. What's interesting about your art is you ask people basically to question their own beliefs in many ways. I'm going to ask a sort of a pointed question here, but how do you get people to question the value of NFTs at this moment? Because they have dropped a lot. You said half of the point is that the way that brands are experimenting is they're meant to hold value or gain value.
Sure.
Will they come back? How do you see value erosion for your market right now?
100%, yeah. Everything is down, and it's sort of a case where you're seeing the people who are in this, you know, purely for the sort of like speculative value, a lot of them have exited as the sort of hype around this technology has sort of died down. And you saw the same sort of thing again with the beginning of the internet, where there was a mass, everything was .com this and, you know, .com that, and it's something where that's sort of, I guess, what humans do. They get really sort of, you know, jacked about something, and then there's this sort of trough of disillusionment, and people sort of, you know, settle into what are the actual real sort of like use cases around this technology. And the people who are using this new medium to do innovative things and are sort of sticking with it, there are many of those people. And I think it will continue to sort of like grow and find an audience that this resonates with. And I think we're still very early in the concept of sort of owning digital things, just as being like a sort of societal norm. And so I think, especially looking at younger generations and kids with Roblox and Fortnite skins and all this, it's so natural for them to apply value to a virtual object. And so I think it's something, the sort of trends definitely trend towards more people sort of putting value in things that are, you know, virtual or a combination of virtual and physical.
Beeple, you are a digital artist. You opened a studio in March. You have this relationship with Christie's. How much money are you making from all this?
Well, she's just really getting right to it there. How much money you're making? Really, Guy? That's the question? It's something where, again, it's to me, it's about what sort of value are we creating around this stuff? Because I think that is where the sort of like money will come from. If you are doing something that people see as sort of new and innovative, and that has been always the case for art. Again, you know, painting the soup cans, and it was sort of like, that's nothing. And then it was like, wait a second, that's a new way of looking at art. That's a new way of thinking about what art could say, what it could be. And anytime you're doing that, it will have lasting value. If you're not doing that, it will not. That's all it is.
Some spicy language, which some of our viewers will have to swallow for a moment. Lastly, like, what do you want to learn about where technology goes in the next 5,000 days? That's what you're going to be sitting down and talking about and theorizing.
Yeah, I think to me it's about sort of looking back at where sort of this stuff has been and what have been the sort of historic use cases and what have been the ways that people have interacted with this technology, and figuring out what are the sort of like pain points there, because I think it is still something where it's very complicated to buy an NFT still. And I think what are the ways that we can make that simpler? What are the ways that we can bring people into owning virtual objects and virtual sort of like ownership and educate them about that in a way that makes it less scary, less complicated, less cumbersome? I think those are the things we really need to focus on with technology.
On Tech Summit tomorrow with Christie's. Beeple's going to be there. We thank you in the meantime very much for joining us to talk about it. More next about money being spent on technology. This is Bloomberg Technology.
Apple's first generation iPhone was sold for more than $190,000 at auction. The unopened 2007 model was bought for nearly 400 times its original price after 28 bids in LCG auctions. The sale comes months after another iPhone from 2007 was sold in February this year for over $63,000. Caroline, this is the definition of mint in box.
I'm looking at like some of the pictures of what it all looked like its first iteration. And didn't they have to cut the prices because it was hard to sell?
Yeah, I mean, they still got a pretty good return on it. And what's incredible, 4 gigabytes, $599 original sale. The base iPhone 14 now has 128 gig technology.
I wonder how many people own them in such mint condition. Meanwhile, have a wonderful vacation, friend. Ed's going to be heading off for a little bit, but that does it for this edition of Bloomberg Technology.
Don't forget, recap the podcast wherever you get yours. This is Bloomberg Technology.